Are we in for a recession? Is it going to be a hard landing or is it going to be a soft landing? Should I wait for the storm to pass? Should I try and time the market perfectly before making my next real estate move? All of these are great questions, or are they? I'm Ralph Fox, and I am the broker of record and co-founder of Fox Marin Associates, a boutique residential real estate brokerage that focuses on central and downtown Toronto. While real estate by nature is hyper-local, the purpose of this channel is to discuss economic and geopolitical events and macro trends that could have a significant impact and shape the future landscape of Toronto real estate. If you would like to keep abreast of what might happen or be coming around the corner in Toronto real estate, then please smash that subscribe button down below. So let's take a look. What is a recession? And that's a really good question these days, because the typical or more standard definition of a recession has always been 2 quarters of flat or negative GDP growth. However, right now that definition seems to be changing depending upon shifting political narratives or whatever headline you're reading in the newspaper or online. So let's just look at recessions as an economic slowdown and not get so much caught up in what the actual definition of a recession is. And if you look back historically at the United States, going back to the 1880s, what it will show is that these economic downturns are just part of a larger economic cycle, and they typically last about 18 months on average. So these downturns really, truly don't last forever. And we're probably in the early to mid phases of one right now, but that still is technically might be up for debate. But knowing that recessions don't last forever, or economic downturns don't last forever, let's really take a deep dive now at what type of an impact they have on real estate valuations. So there was a report that was put out by the C.D. Howe Institute in conjunction with CREA, the Canadian Real Estate Association, and they took a look at real estate prices across Canada, countrywide, during recessions. And they were trying to understand what the actual price decline was, or even if there is one. And the answers to this are really interesting. And so the report came out and said that during downward economic times or recessions, prices of Canadian real estate actually rose. And they rose on average by about 1.8%. So this is really interesting, especially knowing that central and downtown prices and appreciation always tend to outperform the rest of the country. So in recessionary downward time, owning Toronto real estate is actually a pretty good, safe bet. And if you look at the United States and you look at the last 6 recessions that they've had going back to the 80s, you'll see the only real downturn in prices was in 2008 during the subprime crisis. So it's not just a Canadian phenomenon. It's also in the US as well, save and except the outlier in 2008. So the other thing to look at is we've talked a little bit about real estate prices during economic downturns, but let's look at mortgage rates. What happens during recessions or downturns? There was a great article that I recently read in Fortune magazine, and it showed that in a typical recessionary time period, mortgage rates have fallen by about 1.8 percentage points, and they actually continue to go down even after the recession or downturn and things have started to move upwards. So if you really look at what's happening right now in Toronto, we're sort of following that trend line in that, yes, the economy is definitely slowing down. We've seen a bit of a drop in real estate prices, but now they're starting to trend up in Toronto, especially in March, and we're seeing that in April as well right now. You've seen a flat line or a pause by the Bank of Canada, where interest rates basically have been on hold. And it looks like right now the narrative, especially with inflation under control, we've seen a print come out, reduced print now at 4.2%. So inflation is coming down, and interest rates now have been on hold or on pause for the last 2 Bank of Canada announcements. And it seems like in the fall, or maybe even by end of year, we could start to expect or hope to see interest rates starting to come down. And so if you follow this trend, this all seems to be showing or evident that we may be beyond the bottom of the market and things are starting to trend upwards. Now, would anybody have guessed that at the beginning of the year? Probably not. But as we all know, it's impossible to predict the market. It's impossible to time the market. And some of the greatest investors and economists have just been continually proven wrong time and time again, especially in this post-COVID world. So it's really difficult to say anything with 100% certainty, but what you can tell is that owning Toronto real estate during a downward trend in terms of the economy or recession is a great asset to be holding on to. And as things start to turn around, which it seems like we're on the cusp of, we're seeing prices rise dramatically with severe inventory challenges across the board. So the moral of the story here is it's almost impossible to try and time the market or predict what is going to go on in the economy short term. But if you understand fundamentally long term that owning Toronto real estate is a great long-term investment, then you should really take the pressure off yourself in terms of trying to be a global economist and really look at your personal situation and try and ascertain what makes the most sense for you, for your family, and for your goals, and then make your real estate decisions based on that. That is my recommendation. And if you have any questions, if you want to make any comments, please make comments. We love hearing from you, and please don't forget to subscribe.